Hello, everyone. Welcome to Smart Investing and welcome to the channel. I'm your host, Albert, and today we're going to be going over the banking services sector. Today, I have about 6 stocks for you. As you can see, though, before we start, out of the 6 stocks, 2 of them have similar names because uh, I wasn't sure which class was the right stock. So on the list, I had this one first. Sorry, I had this one first, but the actual one was this one. So I wasn't sure, and I wrote them both down. So I wasn't sure which one was the right one, but I looked at both of them anyway. So it is actually this one, but we're still gonna go over uh, both of them anyway. So again, we're gonna start from the bottom and work our way to the top, so that way there can be no confusion. I can do it from the top to the bottom, but I don't know. I guess I have a habit from the bottom to the top. So let's begin. The first stock we have is SVBI. It is called Severn Bank Corp. So we're gonna be doing a quick financial uh, deep dive in this. So we're gonna do fundamentals and a little bit of technicals, and we'll see if we do some quants as well. So first things up is the price at 13 and 63. We can see in the 5 year chart that over the last 5 years, sorry, it's not giving me the hold up. Okay, there we go. So, over the last 5 years, we can see here, if we were to draw a line from here, maybe the first 2 years, it hasn't broken about $8. Now, around, we can see June of 2018, it broke the $8 mark. And then if we were to draw a new high around, let's say like 950, uh, it reached all the way to 950 and it stayed pretty much at that high all the way until 2020, and then a low for those past 2 years from 2018 pretty much to 2020. The low of that was about $7.80 or 7.75. It's not a big range. It's a really tight range. Obviously, because the price is so small anyway, it hasn't grown anyway. I'm not much of a stock picker for banks. Like, what I mean by that is I'm not fond of it. I think banks lack a lot of growth and capital gain. Overall, I just don't like the banks. But again, since it's part of the financial industry, I have to go over it. So it's just for my own knowledge, whether I like it or not. I just still have to learn and go from there. So if we look at the bottom, that's when it hit in 2020. So the bottom was about, we can say about $5.25. So it did break the new back to new highs when it did break it back from that 950 level, or that 980 level, sorry, from 2018 here. So that was in 2021. It did break that new high. And then as we can see here, so basically it went from about let me double check. So it went from like 980 980, and then it broke all the way to high was about $13. So another $3. That's not much to get hyped about. But then it slowly gained momentum as of, let's see, this was in October. This was in October of 2021. So after 2021 in October, uh, that was pretty much it. It stopped from there, and no volume has occurred ever since. My guesstimation was that they got bought out. Uh, so it looks like right here they are under a new ticker symbol, now under SHBI. So we're gonna go to that. But anyways, what I want to say real quick is the stock doesn't seem like a good stock anyway, just by looking at the numbers. So we're gonna continue looking at what was it, 2021. So we're gonna see what happened in October or around there. So the stock has gone up, gone up, gone up, gone up. It's gone up, and now it's starting to go down again. And again, these look like big moves, but when you look at the pricing, it's just not really a big move. Market cap is at 364 million. And as we can see here, they're positive in earnings, dividend of only pretty much 50 cents a year. That's not my kind of stock, but to each their own. So looking at these numbers, uh, I think it's a bad stock. I don't really like it. Look at these technicals. I mean, they've gone up, and very wild, and now down. It's a huge dip down, then a huge big dip, little dip here, like I said, and then going back up, and then straight back down. Um, Literally in a matter of days. So we're gonna look at the quants. I mean, I really don't care for it. It says it has momentum. I don't see it. So horrible stock. So I'm just gonna move on to the next one. I just don't see any potential for this one, so we're gonna move on to the next one. So next stock up that I have is HBT. So HBT is called HBT Financial. We could look at the proper name if you guys want, and we'll do that real quick. So proper name for HBT. HBT. So they're really called Heartland Bank and Trust Company. So obviously they're in the banking sector or banking services sector. That is the related title for it. So we want to look at the last 5 years. They have been growing since 2020. That's not out of the ordinary. That's pretty typical from a 2020 bull run all the way to 2021. So basically the most of 2020 and all of 2021. So those 2 years have been like a notorious bull run. And so we have a price of $17.66, market cap of about 508 million, and 52-week high and low, not by much. PE looks pretty cheap. So it looks like it's at a good value. Positive earnings. Earnings are at a 1.9. They can cover the dividend. Dividend yield of 3.62. But as we can see here, based on the chart, if it's to draw a line touching from 2020 and all the points in between after that, we can see it's about 720, 1720, sorry. So it's broke its new highs for a little bit, and that was even towards the end of 21. It only broke maybe an extra dollar. Excuse me, carrying into 2022. And then obviously in 2022, a lot of downtrends, a lot of stocks have sold off. Uh, this stock doesn't seem, and I'm sure some bank stocks have sold off, but this one hasn't seemed like as if it has been affected that much, and it doesn't seem like it has sold off much. But even then, looking at the chart and the numbers, I don't think it's a good stock. I'm gonna say no to it. I just don't like it. I don't see much potential. The earnings seem okay. I mean, they look like they're beating earnings. But even at a time like this, where many people are bearish, including myself, um, it's just not a very good cycle to be bullish, even though we're in a bearish trend. So they could be beating earnings all they want. And my highest expectation would be, yeah, the stock might go up. But again, this is not a stock to really consider and say, like, wow, I'm going to win a lot of money because, um, the stock is just not performing well. Whether it beats earnings and on revenues and on their income, basically their net earnings and all that. So these are wide gaps here. I mean, considering the price, so we're talking about a at least a 5 cents difference. So this is almost like a uh, 7 cents difference, give or take, for each quarter. So I mean, it helps to be positive, and then all I can say is if they can carry this momentum into next year, this stock might perform well, and then you might see some interest, some investor interest into this. But as of right now, I just don't see it. I just don't see it. I think they're just better selections out there overall, so we're gonna stick with that. So highest rating that they got was momentum. I can see it for a little bit, but again, this company it needs work, and based on the share price, it needs a lot of work. Um, but not only that, it just needs interest from you know people. Got to be attracted to this stock based on evaluations or some technical perspective. But I personally, I just don't see it. So we're gonna move on to the next one, which is HMST, and I'm gonna click on that. HMST. So Home Street, $642 million market cap, 52-week high and low. So it seems like people do like this stock, which is not a bad thing. So PE is at 7.32. That's very, very cheap. Earnings are pretty strong compared to the other banks. Uh, Yields look okay. Total dividend is at 1.4. Uh, it's pretty standard, I would say. Pretty standard for a banking sector. So as we can see here, for the technical side, almost all of 2021, it's been a good year for everybody. But during 2022, whole new ball game. They've been flatlining here, and now it looks like they're about to go slightly down again. So this is not really a beaten up stock because it's still taking a beating, but um, it hasn't gone down to its previous lows. That's for one thing, and second of all, um, these little dips here, I think the most of it was gone here. And mind you, we're in September, so most of the year is already gone. So we only have one more quarter to end the year to do all the results for the Q4. But anyway, what I'm trying to say is these aren't big moves for the last few months. So in a way, this stock is going sideways and still holding up. So now we're going to look at the analysis. Obviously, they're going to tell you to buy or hold. Surprised they're stating unperformed, but that's a whole nother case in itself. So highest rating that we got here for the quants, I see it's at 6.59. So round it off to 6.6 for quality. Now, if they do have quality, we're gonna run through some earnings and some other key indicators. So I want to see what it is for yearly. Their numbers look pretty strong. I still need to see their net margins, which I don't have, but I'm sure they're growing this company based on the yearly results that I have in front of me. I don't have nothing for, well, not much for net income or revenue or operating income. I mean, let me see. I do have net income that looks really, really good, but I need to support that with more data, and I just don't have it on me. I wish it was this, but it's not showing me. That's what it's supposed to be, but it's not giving me that info. So 90% debt. That's not a company. Obviously, no banking business is not working properly unless they're high in debt and high leverage. So with their cash flow, I'm not even gonna look at that. I'm just gonna skim right through. So the stock seems okay. If for some reason if people are biased and they just love banks, um, sure, why not? I wouldn't recommend this stock adding it to the watch list, but I don't know. I just have to go with the flow, go with what people like. If people like banks for some reason, then so be it. Uh, the reason I do like it is because that range for the 52-week high and low. So that definitely says a lot. Uh, it's telling me that there has been pretty good interest in it. When I mean interest, I mean you're favored or you're geared towards this stock, like you're attracted to the stock because either people are trading it or maybe it's a decent evaluation at a very cheap price. So I guess you can watch list this stock. So overall, uh, I don't like it for dividends, even though it does pay a dividend. But really, I only like it more geared towards capital gains, if that makes any sense. So basically, I see this more as a growth stock instead of you know a stock like that where you can get it for income. I just don't see it at all. I don't see it as a company to use it as a strategy for proceeds and all that. I just don't see it. So we have here a really big dip in 2020. This stock looks like it's got delisted. CBSHP. Well, let's go back and look at that. CBSHP. And then in around 20, end of 2020, that was the end of that. So what happened? Did they sell the company or did they just disband or legal issues or put up a notice out of nowhere? No clue. And honestly, I just don't care. So next one up was CBSH. I like the momentum. You see, it's staying above for right now. It's staying above that 60, that high 63 and change with that low 64. So it's still holding up, and the 52-week high and low is it's pretty decent. I know the difference in it is like about a $13 difference, but that number on the low, that's not typical to see on banks having a $61 per share price. Decent volume, decent market cap. It's not the smallest and it's definitely not the biggest. What I do like about small companies though is that they're usually have more ambition and they're driven to do better because uh, maybe they might have better resources, but obviously not enough capital. So they're gonna try to do things a better way, a more efficient way when it comes to smaller companies, and to not only outpace the stock market, but they want to outpace their peers. So to each their own, but this company doesn't seem too bad. Does not seem too bad. So we're gonna look at the dividends. It looks like they were cutting dividends. They look pretty flat. See here at 27 cents and 26, 26, 26, 26. Everything has been 26. So basically the end of 2020 was the end of this company. So they are not really paying rising dividends. You're just stuck with that regular payment. I sure as heck wouldn't be happy to pretty much be collecting and not having anything rise every year. Um, it's not that it's pointless, but it just makes it harder on yourself because it's like you're spending more money to have better returns, and it just shouldn't be that way. You just gotta be smart, choose wise investments, and again, I can't recommend price ranges or price points, how many shares or what to buy, what not to buy. That's all up to you. So with this company, moving on, we're gonna see real quick the quality, and yeah, I guess you can say this company is okay. I guess I would say yes for a watch list. I want to read a little bit about what they do since for some reason Wall Street likes this company for some reason. So they provide a range of retail, mortgage, banking, corporate investment, trust, and asset management products and services for individual businesses and individuals. So basically, your typical bank. So I would say yes for a watch list. Overall, I don't like it that much. I wouldn't name it in my top 10, but this is definitely not the worst stock for sure. So as you can see, these two companies were similar, but the real one was this one. So we're almost done here. We're gonna look at RMBI, and we're gonna check that out. So we have here, uh, looks pretty flat. It's gone below 2020. Volume is low. $164 million market cap stock. Then we have here the earnings per share at 1 is positive though, and dividend yield at 2.8. Total dividend return is at 0.4, and we have the chart that it looks like ever since the late 2020, then it's gone up. Now it's going straight down, and it's pretty much looking like it has followed the overall market. The major indexes. So we're gonna look at real quick the quants and jump right into that. So the highest rating that it has received for strategy, or the highest rating for analysis, is the momentum at 8.68. Could round that off to 8.7. And yeah, I mean it does not have any volume or 52-week high and low. The market cap is awful. So I'm going to say no and pass on this one and say no to a watch list. So we're going to X this one out, RMBI. So I believe that is it. Let me see. So that's it. That's all we have for you guys. So thank you guys for watching. Thank you guys for being patient. I didn't expect to add that other stock, but it is what it is. Again, thank you guys for watching the video. Like and subscribe if you like it. If not, then just stay tuned and hopefully I can give you guys something to watch, something to like, or something to subscribe to. I try to provide valuable feedback and information, accurate information. I'm pretty knowledgeable about stocks in general, and that's pretty much it. So I'm a little bit tired, so thank you guys for watching, and I'll see you guys in the next one.